All right, welcome everyone, wherever you in the world you may be joining us from. Hello and welcome to this webinar put together by Coronation Registrars. And it's the topic today is leveraging fintech to accelerate investment opportunities in the capital markets. As I said before, it's put together by Coronation Registrars. Welcome, ladies and gentlemen, to today's discussion. Is a pivotal topic that stands at the intersection of finance, technology, and investment, leveraging fintech to accelerate investment opportunities in the Nigerian capital market as we navigate the dynamic landscape of financial markets. The infusion of technology has not only reshaped traditional practices, but has also presented unprecedented opportunities for investors, stakeholders, and the market as a whole. Today, we're going to delve into the realm of fintech and its transformative impact on the Nigerian capital market, exploring how innovative technologies are shaping the investment landscape and fostering economic growth. So welcome again, and definitely, if you have any questions, we have the chat box open. You can always send in your questions, and we're definitely going to get to it. And as I said before, our host today is Coronation Registrars, a subsidiary of Coronation Group. They're the leading provider of securities register and data administration services in Nigeria. They've pioneered the introduction of new products such as electronic polling, e-dividends, e-bonus, e-notifications, and e-lodgements. So right about now, we have our keynote speaker, Mr. Tobe Nadozie, is a divisional head, business technology and digital innovations at the Central Securities Clearing Systems PLC. He'll be delivering the keynote address. Mr. Nadozie, you have the floor now.
Okay, thank you, Ladi. I'm excited to be here, and I'll be delivering the keynote address today. I'll be speaking on leveraging fintech to accelerate investment opportunities in the capital markets. And I hope you can see my slides. So I have a lot of very trusted hands in the capital market who will be joining me to put some credence to the theme of today. So basically, I'll be talking about the uniqueness of Nigerian financial space, after which I'll talk about disruptions. Then we'll look at the capital market challenge and the opportunities bucket, then why fintech, and importantly, at the end of the day, what is the need for all of us? Because it's important to begin to check and see why we have to go this route. Just a quick intro, of course, about the capital market. Majorly, mark my words, majorly regulated by the Securities and Exchange Commission, because a couple of things which happen within the capital market, which the central bank is actively involved. And the beauty is that the SEC and the central bank, they have a close and far better alignment and relationship today than we used to experience, in some far years gone by. What this, therefore, brings to the market is it helps to accelerate and develop the market better. Of course, it also brings some challenges, because where the SEC may say, oh, let's go ahead with certain things, and the central bank, they are not that, quick to go with such things. We find out because of the relationship existing between them, we would have a pause, like we recently had as it relates to the cryptos. And as we look at the capital markets, you can categorize the capital market based on various things, but there are a couple of things that makes the capital market to thrive. Number one is prospects. People enter the capital market because they want to build wealth. So because they enter the capital market, I'm using normal investors' language and not capital market language, because most times Well, want to look at growing the capital market, I think we dwell so much on technicalities and technical terminologies that affects us looking at what will help us grow. Most important thing to most investors is, what is the prospect of my investment? I don't want to enter this market to lose. I don't want to enter this market to remain the same. And they're looking across various factors today. Then liquidity, of course, in the market. So if I buy today and tomorrow for any reason I want to sell, will there be someone who will be willing to pick up what I want to sell? Then the ease of business. How am I able to come in? How am I able to go out? And when I say capital markets, I'm not talking just about the Nigerian capital markets. I'm talking about capital markets across the board. The ease of doing business is why people would rather go into FX trading. I'll talk a little bit about that, and into all this crypto and all these digital assets, because there is ease of getting in and getting out. Of course, it has its own challenges, which is one of the advantages which our own capital markets have. People want to invest where there's integrity, and importantly, where there's stability. So there are risk takers who dwell in spikes and unexpected returns, but largely people who look for wealth, they are looking for integrity and stability. And as we look at our capital markets, the average size of our capital markets today um, is, let's leave the volume aside, because most times I hear everyone talking about the size of the volume, the growth of the business. Amazing. How many people are doing transactions in the market? How many? It will shock us. I'll go through that very soon. So our market is characterized by few transactions, shockingly few transactions. The second thing is, we have an aging investors portfolio. Last year, we had an interesting, age bracket of people getting onboarded into the capital market as a result of Fintech, the MTN transaction. But averagely, our investor portfolio is aging. Then also, the tech penetration in the capital market in Nigeria is lower than all other financial services sector. The closest to us is the insurance sector. But if we look at the volume of insurance to the volume of that's the count now in terms of the investors in our own market, the capital market, is still nothing to write home about. I mean, regulation one way has enforced certain types of insurances. We don't have that in the capital market. So we have to look for another way to grow. We have to look for another way to increase onboarding and transactions in our market. Since, unlike insurance, regulation cannot force it. Insurance, for example, we have over 3.5 million vehicles that are insured in Nigeria as at mid last year. Compulsorily, they have to be insured. So if you take away those who have two vehicles, if you look at the distinct um, count of people who have bought insurance, you're talking about close to about 2.7 million people. That's number of people who will buy at least one insurance policy every year. I'm not talking about life. I'm not talking about other types of insurances, including some insurances that have been created, as a separate regulator, like health. Health is insurance. Pension, the annuities part and certain types of pension, they're also insurance. By the time you bundle pension, health, general, and life, you find out that even though we say insurance is lagging behind, is 0.5% penetration, but the truth is, if you compare the count of the people who are in the insurance bucket as against the capital market, we are not growing, and we need to look at what will help us grow. So basically, this webinar is to say, how can we grow? We have certain challenges, but the beauty is we have certain opportunities. What can we do? And that's why we're talking about the role of fintech. Who are fintechs? Forbes says fintechs is just the use of technology to disrupt financial services, whether it's software, whether it's algorithms, whether it's applications, whatsoever it is that is used, from normal deposits, transfers, bills payment, whatsoever technology that is used to ensure that there is a disruption, there is an improvement in what we do. It's called fintech, financial technology. And the beauty is, financial technology has helped us to open up our space, with the use of APIs and various other models. So the truth is that as we look at various financial services sector and we look at what is also happening across board, even in capital markets with blockchain, with different types of trading platforms, with AI enabled, intelligence, platforms today which help investors make decisions. The new normal is actually fintech. So let me talk about Nigeria. I'll talk a little bit about Nigerian factor as a blessing. If you check Nigeria, you find out that our export, 47.34, there are very few types of transactions that are in that bucket, which we all know. Imports, $52.19 billion. So the deficit, $4.85. We have a very large workforce, even though we have a very large, unemployment base. But here is where I'm going to. We have 221 million Nigerians. Out of these 229 million Nigerians, 193 million have phones one way or the other. And 122 million Nigerians have access to data. It means 87.7% of our people have access to data. Now, also, if you check the literacy level in Nigeria, I thought it was, very, very bad. I was shocked to find out that we have 71.3% literacy level. Now, with internet and data, the figure is even better. There is something called phone literacy, different from regular literacy. An average woman in the market knows how to operate her phone. She knows how to make calls. She knows how to search for her children. And the ones that don't know how to use it, they have someone who they can easily call. So it has moved the literacy level a little bit higher. The reason why I'm mentioning some of these things, these are the reasons why people say, oh, we cannot allow tech to come into the capital market. People are not this, people are not that. Things are changing a whole lot. Now, let's check the age brackets. Nigeria, our population, you will find out that the people who are above 45 in Nigeria, they are less than 20%. Less than 20%. The bulk of the others are below 45. I'm getting somewhere. So just to summarize, Nigeria, 200 and something, mobile phones, data-enabled phones, we looked at it. Banking today, as a result of financial technology, is ranking almost pari passu with data-enabled phone. Almost everyone who has a data-enabled phone today in Nigeria has access to one banking service or the other. So in Nigeria today, we have over 127 million accounts. This data is from NIBS. The capital markets. I brought a snapshot of our Power BI in the office. And this year, we've opened just 68,000 accounts in the capital markets. It's shocking, it's demoralizing. And the reason why we've opened 68,000 accounts is because of APIs that people are riding on and a couple of transfers. Let's come quickly to fintech. Let's not get too sad over the figures. Why do we need fintechs in the capital market? Really, there are a couple of things that need to change. And one is we need to improve the mode of customer acquisition. And fintechs, they know how to use technology to get this thing done because they are AIs. They've done this in various other markets. They know how to sort things out. Some of the biggest and most profitable fintechs in the world today, they don't have physical presence, but they know how to position themselves in the faces of the people. So if we want to increase from that paltry figure we are seeing in terms of accounts opening, we need to onboard fintechs because they have various modes of onboarding people. Now, many times when I talk about this, people talk about KYC. The truth is KYC can be done digitally, like we're doing today with our APIs. like we're doing today with various other market players who are integrating to whether it's NIMC, whether it's CAC, whether it's even global, identity management platforms. So we need fintechs because we need to increase and improve on onboarding of customers. Number two, the cost of an average capital market transaction. I'm not here to talk about it. It's pretty high. We need to lower that figure. And that's the reason why many young people will not find it easy to invest in the capital market. You will not blame the capital market operators. The reason why the figures are high is because we are so many players and we have to share. Because if we don't even share the little income that comes from the little transactions that come in, all the market players will die out. So, but onboarding fintechs, if we increase the base with what they also do, they know how to work in a nimble way. We're a little bit traditional. Because they work in a nimble way, it's easy for them to lower, the cost of services. Another reason significance of fintechs is for advanced analytics. Sometimes I call my broker. I mean, this is not targeted at the brokerage community. I call my broker. I'm thinking of buying this share, and he's telling me, okay, Oga, wait. The price was so yesterday. I think it will go to so. That's a broker telling me, and he knows who I am, but he doesn't have any advanced analytics to use to analyze. So I have to fall back to my data science guys. Please, can you give me a trend analysis? Can you give me a predictive analysis? But these things are the things which should be made available to every investor through their devices. I know a couple of people are trying to come up with a couple of things, but it should be standard for every investor. That's one thing fintechs will do. Fintechs would come out seamlessly. Whether fintechs internal or fintechs outsourced, it will enable us to do advanced analytics. Then, specific offerings. One thing about fintechs is they know how to create products. Many of us in the traditional capital market space, where we are straitjacketed and used to certain types of products. The beauty of fintechs, you'll be shocked at how many products they would create. One of the things the banking sector did pretty well was to create, various sandboxes for fintechs to come in and test the markets. And what banks could not do, fintechs that worked with them, they were able to do. Whether you want to talk about loans, whether you want to talk about, even savings, whether you want to talk about asset management, various things. These fintechs were able to bring out various types of specific offerings. This is what they have done successfully in various other markets. This is what they would do if we bring them into our market. They would help us to get, larger groups of people. There'll be resources. They'll get people to participate. They'll reduce the fees. They would also lower investment requirements, with tokenization and a couple of other things, and provide more user-friendly interfaces. Sometimes I feel sad when I have to, speak to a couple of people and see the platforms that their players give them to open accounts. And I look at the page. My father-in-law needed to open an account the other day because he wanted to buy shares in a particular company. And when I saw the things he needed to fill, this is an old man of over 70. And even though he had a CHN with us, the broker he was using said, you have to fill all these again. And I looked through the form. I that am younger, the form was, discouraging to even me myself. I would not fill those type of forms. So fintechs will not do that. And that's why we need them here. A couple of products, I'm not going to dwell on these. Portfolio view, digitalized collateral management. Today, one of the sad things in this market is that many people are sitting on wealth which they cannot reuse. The way wealth works is that once you get to a certain level of wealth, you can reuse your wealth. And I give an example. You have a certain level of shares. It should be able to stand as a pure, almost next to cash collateral for you to get certain type of facilities, loans, not just to get the loans. Because the shares are from certain type of companies, you would even get the loans at a discounted rate. Typically, if we had all these things integrated. But because things are in silos, they are not yet integrated together, People don't have the right type of technology. You find someone the other day, I mean, unfortunately, a man passed on, and his son called me, and his son was like, he needed to go and take a loan from somewhere. And I'm like, but I knew your father was strong in the capital market. It's like, there's nothing he can do. That they don't have access, even though they have an estate, they are afraid if they want to sell it, they will lose everything. I'm like, but there's collateral management. All you need to do is to do a global search. And the beauty of the global search today, with what we have done and which we have extended to the market, is that the global search can be done online. It can be completed within minutes. And you would see the entire portfolio of your father across board. When you see that portfolio, all you need to go is go to one of the financial services institutions that are connected to the collateral management platform, and they can give you a facility. You don't need to go and beg anybody with the type of assets your father has in the capital market. You should not be asking for help. You should be the one helping people at this rate. He told me it's not going to be possible. The broker told him he needed to fill a lot of, I said, form for global search. You didn't need to do anything. And we're able to do it. He was shocked. That was the end of he and his family looking for help from people. But the right technology needs to be spread across board so that Nigerians can use and reuse their wealth and won't have people who are dying in the midst of plenty. Also, predictive market analysis and visualization services. I think one of the challenges we have with market analysis today is there are too many standalone champions in investment banking who come and quote figures for us. But because people don't have a way of visualizing these things in simple to use graphs, which fintechs will provide for you, by the way, then we are so dependent on certain people that when they make mistakes, all of us, we easily sweep along with them. But the beauty of visualization services is that, I mean, you can play around with the graphs, gamification. You can adjust. You can say, what if I do this? What if I invest for this length of time? These are the things which fintechs can provide for us in this market. Also, they can provide 24, 7 equities market. Sometimes when people come and I'm like, I don't see the reason why in Nigeria we can't do 24/7, equities market. They're like, should you guys open at so time, you close at so. I'm like, every market has an opening time and a closing time. Every market, the New York Stock Exchange, every market. But there are ways to work around this. The asset managers, investment bankers, and the tech guys, they'll look at how to work around this. There are ways of fixing the pricing using technology. So if you want to buy by 12 midnight, nobody cares. They use opening pricing and closing pricing. But if we don't get technology in on this, we'll all keep dwelling in the past, which the world has since moved on from. I'm not going to dwell on this because of my time. The question is, if you are going to work with fintechs are not in this just to joke. Fintechs are in this also because there is something they want. What really do fintech want? From my experience with fintechs, as we call them and discuss with them, number one, fintechs want eyeballs. And let me explain. Fintechs want to be in the face of the people. They know that they can easily scale when they're in the face of the people. One of my chairman used to call it eyeball. I used to call it, branding or market share. But he said, no, to me, that's not the case. It's eyeball. Fintechs want, whenever you are thinking, think of us. So that's one of the things they need. They are very, very interested about their valuation because the valuation will determine how much they can raise and the costs at which they can raise it. Of course, there are needs to make money. Many of these fintechs are young guys who would go and raise money, pump it in. They also want to make money. They want to live well. Then also, they're also interested in the viability. The reason why I brought this out, I mean, you can check through this later on, is we need to look at what the fintechs want, what challenges fintechs have to know what we, the traditional players, can bring. What are the challenges of fintechs? Number one, there's a digital divide. They're talking too high. I speak to all my friends in Bamboo, all the different fintechs. We see. And many times when we come into meetings and, we have, capital market players in the meeting, they are dropping words. And capital market guys, these guys want to come and scatter the market. They should calm down. There's a huge digital divide which needs to be breached. Then there's financial literacy gap. Now, it's on both sides, and let's be honest. Fintech guys, tech guys are not necessarily investment bankers. They are not capital market specialists. They've not tried to be sponsored individuals. They may not understand the intricacies of the market, which is real, by the way. Then security and privacy concerns. In this new world where, people are out for anything, we also need to be careful with NDPR and GDPR in place. And beyond even NDPR and GDPR is the fact of ethics. How is the data shared? Then cybersecurity. Then we also have regulatory challenges. Fintechs don't have the patience to pass through various regulatory approvals, and that's just the truth. You tell them to go and do this. Many of them, if you help them do it, they are fine. But for them to go through the process, they find it very difficult. Then one challenge we're having is market volatility and risk also. Then unpredictable technology changes. I mean, we've been hit by various type of changes, and COVID was one, and a number of things have been coming. Let me just say this as we talk about unpredictable technology changes, because that's one of the reasons why many capital market players don't want to, get into fintech. I was opportune to be with my board at DTCC, and the guys in DTCC said, "See, we know the world is thinking of blockchain taking over from the markets. They say they are investing in blockchain because they want to be the change that the world is looking for." So instead of the world changing from them, who are the traditional market players today, they said they are investing in the technology the world is hoping will replace them. So that when the world gets to that bridge, they would be the change that the world is looking for. These are challenges which we face if we want to talk about fintech. But what can we do so that we come together? I have one slide which talks about collaboration. Yes, this slide. So we cannot afford to continue competing with financial technology, whether in-house financial technology, whether outsourced financial technology. We have to collaborate. But in collaborating, the question is, what do we have as capital market holders, traditional capital markets? What do fintechs have? How can we collaborate together? Number one, we have access to capital, we have distribution, we are trusted, we have infrastructure. Say what you like. Today, the market is working. We have data access, we have market structure, we have expertise, we are regulated, we have compliance, we have these things. But there are things that the financial tech world have that we need to build on. The business model, they are so nimble, innovative approach. They build new models. See, they feel fast and they wake up. They don't have time to count, too much losses. They move on. They have technology and they have lean cloud, platforms which they can deploy. This is just so CSCS, in talking to the fintech 2 years ago, we decided that for the market, we needed to build a model. This is like a summary of the model which the Central Securities built, just to encourage capital market operators to go into collaboration with fintech. And we say, oh, you have your brand revenue, your data, your channels, your talent, your regulatory backing. Bring the fintechs who have all these other things, disruptive ideas, latest technology and talents, and other things. Bring them on board and let's work with you to see how to move the market. And based on this model, CSCS has built a sandbox so that traditional players, when you come with your fintech guys, as long as you're a shield to them, if they don't have any regulatory approval, as long as you're a shield and you have the right type of contract in place, we'll give them access to the sandbox so that they can test things. There are a number of use cases for this. There are a lot of active fintechs in this market. I was shocked. Let me just mention this figure. I didn't want to put it in my slide so that nobody will snap the picture of the slide and come and quote me tomorrow. But you can go and check on flex.in and on LinkedIn. In Nigeria, as we speak today, I hear that there are 200,000 daily FX trade on the phones. 200,000. We are second only. We are first. South Africa has more in terms of the value of transaction, but in terms of count, they have 190,000. And Nigeria processes 14.5 million transactions daily. It spikes up. It hardly goes below $10 million. The Nigerian market, a daily transaction, buy and sell side, has hovered at about 5 billion naira. So that means if you take what young people are trading on FX on a daily basis, averagely is double what we are trading in the entire capital market, equities market. Then I was also shocked that 43.5% of traders are between 25 and 34 years. Just 15% of them are above 45 years. Today, how many of our brokers are between 25 and 34 years? But guess what? Even though 95% of traders in the FX market don't succeed, the trade volume does not go down. If we are able to open up this space with the use of technology, with the integrity, the stability we have, people will coming into this market. There are opportunities in this market. Let me conclude before Mr. Awo, who is in my audit committee, would quote a number of the things when they come in and they meet us at AGM. That if these opportunity buckets are here, what are you guys doing? But let me just wrap up with this. Number one, fintech, they remain disruptors. And the truth is, our capital market needs disruption. We cannot continue to grow traditionally. We need non-traditional growth. They've helped other markets. It's time for us to open up our space to fintech. We have all that is needed. The only thing is we need to be more open and let financial technology come in. They will enable faster growth also of the retail base of our markets. And the truth today is sometimes you see, I mean, my guys in the data science, sometimes they give me a predictive analysis and I see a downward trend in a particular symbol. And I'm asking them why. And they tell me it's because from the sentiment we are having, a particular corporate who is a major shareholder in this particular, equity is going to be doing something. Because, when they build these, their predictive analysis, they also take sentiment analysis from the markets, from financials and things happening. And when I see the dip is happening because the retail count base of many of our, equities is poor. And so when two corporates cough, what happens to the share price? It begins to drop. So that means they can actually influence the market much more than we think they can. But what fintech will do is fintech will increase the count of retail space. Look at what happened to MTN. The oversubscription of MTN just because of financial technology enabling. That is what we need to do to this entire market. If we're able to collaborate with fintechs and we grow this market, there is so much for every one of us. Thank you. That's the end of my keynote address.
Wow, that was definitely a packed address, and I really want to appreciate to Mr. Toby Nadozie for that. And I share most of your sentiments there because it's gotten to a point where if I want to transfer money, I'm more comfortable using some of these fintech apps because somehow I just run into problems when I'm using, traditional bank apps. So much you touched on there, talking about the FX transactions, in Nigeria, quite incredible numbers. And the amount of accounts created in the market, 68,000 accounts, quite an incredible number there, and a sad number. We definitely need more, at this time. I've been also looking at the NGX, and when I look at the website, I cannot find information that I need about, some of these stocks that are traded there. I've been saying it a lot now that we need more information. There's something called coin market cap that most of these crypto traders use. It is packed with information about most of these, crypto assets, from market cap to trading volume, different information that a trader would actually need. And I've been talking to the NGX that we need more information about, our stocks. But we're going to move it along now. We're going to get a continued remarks now from Chiamaka Ugo Budike. She's going to be welcoming us to this panel. Definitely, that would have been done earlier. She's the Chief Client Officer, Coronation Registrars. You have the floor now.
Thank you very much, Mr. Ladi. And thank you so much, Mr. Nadozie, for setting the ball rolling in these discussions today. The presentation is so well packed, very insightful, very educative, very enlightening. And there's so much to take out from there. And like you said, technology has to spread from the point of entry even to the point of exit. for both the investors and also the clients' companies. The way things are today, we cannot grow traditionally. We just have to leverage fintech. Like from today's discussion, we can see that there is low investors transactions, there is aging investors portfolio, there is low tech penetration. And all these are what we need to leverage fintech to accelerate investment in the capital markets. Like I said, like I often say about our business, the registrar's business, we manage the moment of truth in the capital markets because we determine, we pay investors the dividend, the yield on their investment. So we can't really do without, applying technology to make the experience smooth for both the investors and the client's company. And on behalf of Coronation, I welcome every one of us again to this webinar. What we are doing today is very much aligned to the Coronation Strategic Trust of democratizing wealth and financial inclusion. And that is where we're doing all this, to educate people, to educate the investing public, to educate companies that want to come into the market, of the capabilities, of the possibilities available, leveraging fintech to drive their experience. It promises to be an exciting session, as you can already see from today's keynote speech. And the rest of the next 30 to 1 hour will be, full of exciting, interesting, and educative responses, discussions around fintech and how it will accelerate investment in the capital market from our incredible panelists. So I encourage us to sit back, take a lot of learning, provide your feedback as well, and we are all well positioned to respond to them. Once again, on behalf of the founders of the Coronation Group, I welcome you to this webinar today. And please note that this is just one out of a long series of webinars. So please keep in touch with us. We are always there available. There will be more of this coming up in the coming year. Thank you very much.
Thank you for that, Chair Makaugo LBDK, giving us a welcome address. She's the Chief Client Officer, Coronation Registrars. Thank you for that. And as she said, yes, this is going to be an information-packed segment. And definitely, if you have people, wherever you're watching from, if you have people that you believe need this information, to bring them in, let them come and gather information here. We're going to be talking about a lot of things that impact the capital markets in Nigeria, see the way forward, how to build this market so we can compete with the likes of markets we have in the US and in other developed climes, and how we can leverage fintech to actually make that happen. So right about now, I'm going to be introducing our panelists. These are strong men in the industry, and they're going to be sharing knowledge and a way forward, to build this markets. We have with us Mr. Oluseyi Doherty, is the Head Information Security and Technology, Coronation Registrars Limited. We also have Mr. Nona Awo, a capital market investor. I always see Mr. Awo everywhere when I'm going for AGMs. I always see him present there. And we also have Mr. Phillips Wachuku, prototype lead at Triumph Limited. Welcome, gentlemen. So we're going to be good afternoon. Yes, it's great to have all of you here to come and help us break all of these issues down and see the way forward, with Nigeria's capital market. I'm going to be starting with Mr. Oluseyi Doherty, Head Information Security and Technology, Coronation Registrars Limited. A lot has been said, already at this time about why we need to, get the fintechs, into this market and the advantages that they actually bring, at this time. But for you, Mr. Doherty, what specific technologies, within the fintech ecosystem are you seeing playing a significant role, in accelerating investment opportunities, and how are they enhancing market efficiency and accessibility at this time?
Thank you, Ryan. Once again, good afternoon, audience. Let me first of all appreciate the speaker to be my guide. It's more or less like he has more or less like prepare the way from me. So quick to the question. Let me start. Those fintech solution that, of course, more or less like the capital market need. Let's start with what I call the cloud solution. And basically, just are the advantages that the fintech guys brings in. Because for cloud technology solution, you don't need to have a physical infrastructure. You don't need to invest heavily in more or less like other hardware, all the stuff. For cloud solution, basically what you need is, okay, I need this quota. This is what I needed. You subscribe to it, you pay. Then as you are increasing, then what you do, more or less like you continue to increase your more or less like the capacity of what you needed. So basically, the first technology we need is the cloud technology solution. And I keep wondering these days for capital market operator that more or less like that still more or less like in the dark age of saying, no, I don't want to go to the cloud. You understand? Then, of course, sooner or later, you'll be out of the business. I can tell you for a fact, you'll be out of the business because recently, good enough from even what Toby has shown to us, Internet of Things, where devices are communicating more or less like in the real-time information, and there you are still working more or less like saying, no, I don't want to go to the cloud. But for us here in Coronation Registrar, we've moved. Currently, our services are 247, and that is because we've done what? We've moved to the cloud so that at least there is no downtime, and at the same time, again, it reduces our cost. The overhead cost definitely reduced because now what we are paying for is what I'm using. Unlike those days that probably, okay, you want to get everything before you move. Nothing like that. Again, let me move to what my Oga said again. Advanced, what I call analytics. You cannot, when you are in the capital market, you want people to come in and they don't even know, especially you don't even know your target audience, your customer. You don't even have information about them to say, oh, these are the people who are trading. Just like Tobias said, we might have a long list, say, okay, the volume, just like they give to us 7 billion trading, all this stuff. But who are those people trading? You need to have an in-depth analytic information about those people who are trading. You need to know about what exactly is happening so that at that point, you'll be able to give a predictive information to more or less like those people, the young generations out there that are willing to do what? To invest in this capital market. So basically for us here, that's what of those things we're doing. I'm still going to get there when I'm going to talk about our digital solution that we've done, because what we are using today is to mine the data we have to give a predictive analysis of what is happening so that at that point, if you are a shareholder or probably you are a customer that we manage, you'll be able to have information so that at that point you can say, oh, I want to take this decision, I want to take this decision. Again, also, we have what we call process and service externalization. Basically, no grammar. What that is talking about is today, because the fintech guys, they understand that we don't have the infrastructure. Infrastructure include more or less like to say the traditional way, all those stuff. And again, they might not have the domain knowledge of what the bot wants. they wanted is, oh, we want to create innovative solution. And these are point one, point two, point three I need. What I need is to do what? Ask for API. I will integrate it with your API. API is basically what man is like. I needed this information from you, and I wanted to get it. I have created an algorithm to get it for me so that I can use it to make an informed decision. So basically, the third aspect is that process and service externalization. You cannot do away with it. These days, I don't know any financial institution, if you don't have an API available for integration with your solution or internal application, you will soon go out of the business. Again, what we are doing at the same time also, sometimes people call it competition, just like Toby said. It's not competition any longer. It's more or less like co-opetition, more or less like we need to collaborate, meaning that, yes, this is a domain knowledge of you, this is my domain knowledge of me, rather than for me to start to say, oh, what you have the domain knowledge, I want to start building on it, wasting time, wasting energy and resources. I don't need to do that. What I needed to do is to do what? To cooperate with you. I needed some certain domain expertise or from certain information that from CSCS. I don't need to start because I don't need to more or less like I want to start as a depository. What I just needed is I'm going to collaborate with CSCS to say, oh, I want to roll out a solution. I want to reach out to my target audience. This is the information I'm having with me, but because I needed some certain information that is residence with you, what I need to do is to collaborate with you, get me this information, I get with what I have, then we'll do what? We'll be able to service the customer. So basically, if we start thinking in that direction and exactly what Coronation is doing. For example, let me put for some of our digital solutions. We have shareholder life that we've segmented for investor. We have the usual life that we've segmented to our clients. We have stockbroker life that we've segmented to stockbrokers because we understand that for a stockbroker, because we've seen that, oh, many of them probably because of the fact that, yes, maybe in terms of technology infrastructure, they are still more or less like, they are not there yet. So what we've done is to say that why can't we just create a platform for them to at least to make that work easier for them rather than, of course, and basically what we want to do is to have a turnaround time so that it's going to impact on their own services and the quality of their services to their customer, and at the same time with us. So what we're saying in essence is that those technology, I've talked about the global, the cloud technology, I've talked about the advanced reporting or analyzing, I've talked about Internet of Things days because we have so many devices that are connecting, talking to each other, all those stuff, and they needed the real-time information. So meaning that, yes, that devices that we are using, you need to be able to do what? To send some certain informations to them so that at least they'll be able, right at the comfort of their home, while they're sitting down, they don't need more or less like to say, oh, I need to go to those days. When you go to CSCS office at Broad Street, you now start looking, okay, what's the price? You understand? So those are the solutions and those are the technology that we needed in capital market and which Coronation are more or less like deployed to the capital market. Thank you.
Yeah, thank you, Mr. Doherty. So much you actually unpacked there, and definitely, you know, when it comes to bringing these solutions, I'm sure, you know, some people will also be wondering that, you know, definitely we know there are solutions, you know, but at the end of the day, they do come with risk, you know, sometimes. But I want to take it to Mr. Nona Awo now, a capital market investor. You know, at this time, definitely we've seen a lot of technological, you know, advancements. You know, we've seen some right now, you know, in Nigeria. Like for now, I'm able to buy, some stocks, on my phone, at this time. I'd like you to, describe to me, let's say from 10 years ago, fast forward to now, 2023, how far would you say we've come with applying technology, to the capital markets? That's for Mr. Nona Awo.
Okay, Radi, thanks for the question. First, let me also thank Coronation for putting this together, because one of the major challenges of our market is basically inadequate information. And that inadequate information is much more pronounced with the retail shareholders. And unfortunately, the number in terms of investors is larger there, though they are holding is not proportionate to the size of that class of investors. As far as fintech is concerned, I will want to share a little scenario with you, with our participants. I remember when National Salt came to the market, and National Salt wanted to do a special sale at the end of the market, which happens to be Friday. It took the whole of Saturday for that transaction to be processed, hence delaying what is regularly recorded as weekly reports to come in on a Sunday. So quite a number of media houses, I remember then, were struggling as to what is that we're going to report on our Sunday page. So from that point of view, it's certain that fintech is basically played a major role in fast forwarding the process as far as the market is concerned. Hitherto, when it was also all over, one of the things you'll find is that everybody is basically taking paper and biro to say, so and so shares need to be sold, and then the chairman of Colover is allocating, and then he's probably taking a number of days before that itself even comes into your personal account. So all of that is since changed. However, what I think that hasn't changed significantly is the size of products that the market has, and then the depth of our market. I hear people say, you can do 24 hours trade. If the products are not there, it becomes difficult to. So it will be important that will be a major area that both the government and the regulators will need to look at for our market to get to the level that it should ordinarily have been before now. By the way, if you remove all the privatization exercise and a few private initiated listing, you probably will have a market far from where it's currently in, certainly.
Yeah, thank you for that, Mr. Now, definitely, you'd like to see changes when it comes to size and depth of the market and product offering. And definitely we hope that we'll see. But we have Mr. Phillips Wachiku, prototype lead at Triumph Limited. Thank you for joining us. And remember, our audience, you can always send in your questions. And at some point, we're going to be doing a Q&A, and we'll definitely put out your questions and we'll get them answered by our panelists here. But let me come to you now, Mr. Iwachuku. So definitely, it's all about how we can bring in fintech to the capital markets, leverage fintech to build this market, getting more depth and get more people, more customers, onboard more customers in. Talk to me about ways fintech can be harnessed to address challenges and gaps, in the Nigeria capital market. We know there are challenges, at this time, particularly in terms of inclusivity, transparency, and regulatory compliance. Break it down for us.
All right. Thank you so much, Laddie. I think a great place for me to start would be to appreciate our keynote speaker, Mr. Tobe. I like listening to Tobe, not just because of his wealth of industry experience, but for the kind of work Tobe does with the CSCS. Very stellar work and very amazing presentation, Tobe. I think that I think a great place again to start would be to pinpoint some of these challenges, right? And then I'll add credence to what Toby has already said. If you take a cursory look at the NGX today, vis-a-vis an adjacent exchange, such as the Johannesburg Stock Exchange of South Africa, you see stark differences. Our total market cap, has been pointed by Toby today, is around $60 billion. For the GSC, it's around $1 trillion. Total number of investors, historically, we are at about 14 million. If you take a look at the last 5-10 years, we're probably at 4 million or so investors. And out of that number, we have around 40% retail, driving 21% of domestic transactions, domestic investments in the NGX. You crisscross that with 43% for the GSE, being retail and driving 10% of domestic investments. You have around 200 companies listed on the NGX versus around 400 companies listed. At least 10% of those companies listed on the NGX have a revenue of around $500 million per annum. Now, you juxtapose that with at around 50% for the Johannesburg Stock Exchange with the same kind of revenue. Now, we need to understand that Nigeria is a very ripe retail market. Why do I say so? Yes, we may say for macroeconomic challenges, 92.1% of Nigerians live below $5 as quoted by the World Bank. We are 200 million versus South Africa that are at about 60 million citizens, right? For us in Nigeria, you need to begin to look at how to distribute capital market products to the retail segment in Nigeria. There is low liquidity, yes, and if you unpack that, you'd realize that there is very, very little retail participation in our capital market. But what are these challenges? Why do we have low retail participation in the capital markets as against how we currently have it in the Johannesburg Stock Exchange? There is a significant challenge around acquiring new retail customers. In the banking sector, we see how the banking sector opened up when the phenomenon of BVN came on board, right? It meant more players could play from a single source of, customer identification. Today in the capital market, the Nigerian capital market, there still isn't a centralized identity management system, at least opened up to the entire length and breadth of participants in the capital market. If we can build around that, if we can really solve this pressing challenge of centralized identity management, that would mean that for fintechs to really play, Nigerians have thousands, literally thousands of fintechs and hundreds coming into the space every other year. They keep getting most of the funding, most of the FX funding in Africa. They keep innovating here. But the barriers to tap this retail segment within the Nigerian capital market still remain very abysmal. So if you can create, for starters, if you can lower that barrier to onboarding customers, creating a very centralized identity management system, we would see that onboarding really, really improve. And what that would mean would be that we would have more active retail players coming to the capital market. And then they'll be able to invest more in the capital market. Let me give you some numbers, right? We say that Nigerians, at least 92% of us live below $5 per day. But the same set of Nigerians, at least in 2021, spent around 3.25 trillion naira on airtime and data. What it tells me is that there is still disposable income within the low to middle class to invest in the capital market. But that money is not coming to us, right? So I think if a lot of focus is really given to lowering the barrier for entry of retail investors into the capital market, that would be an amazing start. And I know that, Tobe, with the work he does at CSCS, having a go at this, Coronation as well, with the work we're doing with the SEC, are taking a stab at trying to centralize identity management for the capital market. If we do this, every other thing we've talked about today around infrastructure, around around sandboxes. They are very, very important. But let's get these folks into the capital market first, and then we can begin to innovate from there on out.
Thank you for that, Mr. Wachuku. And definitely talking about getting these folks into the market. Right now, definitely there's a cost of living crisis right now with the removal of fuel subsidy and all of that. And I'm wondering, I'm sure poverty plays a role in all of this, because I'm sure some people would rather want to eat than take that money, into the market. Let me get your quick response to that.
Yes, we want to eat, but we also are spending trillions of naira, making calls and browsing the net. That is data for you there, right? Yes, I would rather, the average Nigerian would rather spend 5,000 naira buying rice, buying beans, buying all of that, than put 2,000, 3,000 into the capital market. But if the average Nigerian takes a cursory look of how much they've spent on recharge card, on airtime, on data, in the course of 1 week, it will probably be the equivalent of 5,000 naira. And that 5,000 naira, with the performance of the capital market, at least in 2023, could have given them significant returns beyond inflation, right? So it is, I think this is where financial literacy would have to come in. And forgive me, the capital market will have to begin to play a leading role. It doesn't have to be a push sort of approach, now it has to be pull. It is one thing to stand by the roadside, and wave people to enter your vehicle. It's another thing to go where those people are, talk to them about the goodness of getting into your vehicle, sort of sensitize them, right? Beyond just making them aware that something as the capital market exists, you now have to begin to invest in substantial investor education across the entire length and breadth of the investing public, right? I think once we begin to do those things very, very intentionally, we can begin to bridge this divide. People, yes, would always go for their basic needs. But as we've seen from data available in Nigeria, the average Nigerian is still spending much that is really not about their basic needs. And so we can get a cap of that, bring it into the capital market, and help these guys begin to build wealth.
Right, definitely. We've seen a lot of past governments talk about lifting millions of Nigerians out of poverty. I'm wondering if the capital market can actually lift Nigerians out of poverty, but we'll definitely see about that. But let me come to Mr. Nnadozie now. So you did mention, some technologies at this point, from APIs to, blockchain, and seeing the way blockchain works and how, investments in cryptocurrencies work. We see that most of these assets are tokenized, and, you can share them, you can move them around the blockchain. Everything is, recorded there. Do you think at some point we'll be able to have tokenized stocks, in these markets, and it will be able to perform the way it's performing, in the crypto market, Mr. Nnadozie?
Okay, thank you, Ladi, and thanks to all the panelists. Definitely we can. The truth is, the SEC, they've actually started looking at this. They've been having various discussions. They brought out drafts of a regulatory framework for digital assets. They are still fine-tuning it. The draft has been released now officially as an approved framework for digital assets. I'm sure they've gotten a couple of feedbacks. There is with the way technology is changing nowadays, regulators also try to keep ahead of the pack. We've also been working with the regulators and other capital market operators. Yes, there would be a market for digital assets, including whether it's tokens and various other digital assets. No, it's not going to be like the informal market. And I'll tell you why. The informal market is full of risks that are not regulated, that are not backed by, central banks' funds, which means if anything happens, you have the sovereign backing of that asset. The current crypto world and the current informal market for digital assets, they don't have that backing. We would not play in that type of market. Same with all regulated entities. But are we going to play in a market that will have entities that will have proper risk framework and models in place that will be licensed, regulated, reviewed? Yes, we will. We're all prepping, different things, not just the SCS, and I need to be plain and honest. A couple of other market operators are looking into it. I think the issue is the speed with which we are looking into it is what personally grieves me. Because we are still used to the traditional pie, we don't realize that what is happening in the informal market is in multiples of what we have in the traditional pie. And I think what can change that is the traditional capital market operators allowing the younger people to come in droves, because the younger people want to run with speed that we who are getting gray hair on our head, we are not interested in too much speed as long as what comes in is regulated. But let's bring in young people who will come in and think. We can stay and provide risk and controls, you understand, within regulatory framework. But to your question, will there be a digital asset market in Nigeria capital market? Yes, there would be. Framework has been released. We're all opening up our techs. We're trying to prep. We have done that, not just us. So I just don't want to talk about CSS, but because we are the heartbeat, no matter what people do, we are presenting ourselves to be the custodian and also, ensure that people's records are safe. The speed is slow, but there will be a market.
Yeah, we'll definitely be looking out for that, Mr. Ado. But another issue, Mr. Nadozie, is the issue of settlement cycle, that T+3. Are there plans to reduce this to a lower value? And what risk would this bring?
Now, the real truth in this market today is that CSCS, we actually do T+1 for certain type of instrument. There are bond instruments that do T+1. It's the same engine that does T+3, that does T+2, that does T+4. With what we have done with NIBs today, we can actually do T+0. So CSCS, we've worked on our technology. Late 2021, we deployed a platform. Early 2022, we deployed a platform that gives us varying settlement cycles that can do it on a simple level, that can do it on a trading floor level. The platform has been tested with the NGX and different market operators, and it is live. The only thing delaying our move from T+3 to T+1, which the world is moving to, I know some people are thinking of moving to T+2 to T+1, but the truth is, go to many developed markets, they are looking at T+1 today. The major factors affecting us, number one, is the buying of stakeholders in the markets. Number two, that buying is what the regulator is waiting for the regulator to give an approval. The regulator is not stopping us. The regulator is saying, market, tell us you want this and you are ready. CSCS cannot just come because they do settlement and say, let's move. Because there are other things involved. There are things of liquidity involved. There are things of risk involved. Some people are still not used to an automated settlement within their individual firms. They still do a couple of things, either semi-automated platforms. So they may not have the required ops and tech to do it on a faster basis. But what we're doing as CSS is we are saying, see, we'll provide a platform for you to test run T+1 and T+3. T+3 as we do it today, but start test running T+1. If you want, we'll provide software as a service to take the burden of that matching from you so that you can use this platform and you can do the matching. But the truth is, we've been discussing it. The regulator, they've been telling all of us, please just agree and come to us. If not, the regulator will take a firm decision and move, but we're ready for T+1. Today, we actually do settlement for certain instruments at T+1.
Well, we'll be definitely waiting for that because I know when I trade, I like to get my settlements as fast as possible because that lag can be quite a lot happens with that lag. Well, let me come to Mr. Nona Awo now. Definitely a lot has happened in this market. We've seen the NGX hit new highs, 72,000 points. We're seeing the market cap nearing that, 40 trillion mark. So looking at 2023, and, we see how many customers we had in 2023, about 68, that Mr. Nadozie showed us there. Looking at how far this market is, what would you say is driving this market? Would you say we're having more investors, at this point compared to, say, 5 years ago? Or is this just investors trying to hedge maybe against currency devaluation? Well, what are you seeing here? Are we attracting more people locally?
Okay, again, Vladi, thank you for the question. First, I think it's important that we realize that even within the investors class, there are classes of investors. The retail shareholders don't behave typically the way the institutional investors will behave. And unfortunately for us in our markets, what you'll find is that majority in the space of retail investors don't have the financial knowledge, and very many times don't also have the technology knowledge that we're talking about. So that is an area that we probably need to look at if the market must grow. But currently, two things are also at play. Fortunately, you mentioned that each time there is this size of devaluation, what you'll find is that people also want to make sure that they get protected in terms of foreign exchange difference. So a number of the institutional investors will probably be in that class. But they are within even the retail class, there are also people who have the economic or financial knowledge and who are also deep in technology. That class of persons are also aligning with majority of persons in the institutional investor space. But I think that for our market to grow even much more, because one of the things you hear is, level of poverty. True. But if we have products that's also addressing their basic needs, if all I can do is to save 1,000 naira a month, and I have a mutual fund, for instance, that will also help to accommodate my 1,000, what you would then find is that the mutual fund, because it's also deriving its power from the equity market, you are going to find a situation where that itself can help to further push the equity market. Again, we've seen instances where, because of ETIs, for instance, okay, we've also seen some class of investors who are also taking a good look at ETIs. Okay, ETIs usually will not find a very detailed position as to what is happening in that market. But if you look at a new gold, for instance, you begin to understand that yes, a number of persons are making good money, but that information needs to be available to the whole group of shareholders or investors who are traditional in their approach, and you also will not blame them, because one of the things that the banking experience have shown, once there is a misdeed or somebody's account is being hacked and the money is lost, that is what is in the space as far as information is concerned. So it will also be important that we don't ignore that when we talk about the speed of the market going. But if you then also look at the market global position, you're going to find that literally in most countries of the world, you are not going to find the percentage of the population who are strong in the capital market when you also don't have strong position in estates, you don't have strong position in mortgage, you don't have strong position in long-term funds. But in our own case, what you'll find is that credit is still a major position. And if I'm going to get a yield in treasury bill that's higher than that itself may also be some level of disincentive for me to be in the capital market. But in total, the future is bright. Why? Because any country that must grow will only grow with a strong capital market, because that is largely the uh, point in which all the resources are put for the then distribution to areas of that in need, and then that way the companies will grow. The local government, if they want to take funds, will also grow. Even the government itself, rather than going straight to CBN and taking whatever money they want, will also grow. Even the private sector, who also want to do a collaboration with government in terms of PPP, that is also another opportunity for them to get money, and then all of this will help to boost the economy. But certainly, the best is yet to come of our Nigerian market, giving all the advantages in terms of population, in terms of natural resources, in terms of education, level of literacy, and the more we begin to find more and more younger people go into the market, and then the impact will also begin to trickle down, because they can then engage their parents who don't understand what technology is all about. And so that I made money here, you also can make money here, and that will be good for all of us.
Yeah, definitely. Thank you for that, Mr. Nona. Definitely, and the market is definitely growing at this point, and I can imagine, when we reach the full potential, what the all-share index will be like, and how our debt markets, how big our debt markets will actually, get. But let me come to Mr. Doughty now. Considering the potential risk, associated with technological advancement, when it comes to finance. Definitely with technology, there's risk of, hacks. There's still cybersecurity, issues. What measures and maybe regulatory frameworks are necessary to ensure stability and security of the, Nigerian capital market at a time where, we're fully utilizing technology and fintechs?
Thank you, Mr. Ladi. For me, I believe the problem that technology brings is the same technology we are still going to use to solve that problem. So the only difference is that what is the speed at which we want to respond to those problems that the technology is bringing in this changing environment. So meaning that, yes, we still need technology. Then from the keynote speaker, let me pick three. Let me talk about the fraud, the data privacy, and the cybersecurity. For the fraud part, for me, and that's, I believe, what our regulator needs to start doing more or less like, they need to more or less like have more or less like an IT expert as one of their staff. Because one, they also need to start acting like as a RegTech. More or less like by the time when you build an ecosystem of RegTech for capital market, whereby you remember Phillips was talking about KYC. By the time when you start acting like a RegTech for the organization, for the capital market, at that point, you begin to more or less like to say, oh, with the issue with respect to compliance, KYC, all those stuff, you already have it because you are now acting as directed. So meaning that, yes, the problem that technology has created, you are now using technology to solve it. Again, with respect to data privacy, you remember, probably one of the reasons why the regulators more or less like they are trying to hide away is that maybe when there is issue of maybe litigation, and of course, they can say, oh, as a regulator, because you are part of the system, at that point, maybe there will be a corporate to it. But however, you remember, Toby was talking about blockchain or distributed ledger. So what it's going to do is this. The value of blockchain is this. Make it every information, there is a point, there is a log to say, oh, this is where this data is coming out. At that point, you'll be able to pinpoint to say, okay, this is where it's coming. So meaning that the worry about data privacy to say, oh, where is this data? Where does it leak? All those stuff. They won't be there because now it's a blockchain environment. You'll be able to say, oh, this is where the data leakage is coming at that point. So meaning that, yes, we still needed that technology, meaning that our regulators start need to think as more or less like a RegTech. Then with respect to cybersecurity, I feel that more there needs to be sound, let me say, in terms of standard, to say, oh, for capital market operators, you need to start implementing some certain standard. For example, ISO 27001, so that at least for every capital market operator, they will be able to operate as a standard body. And at that point, I'm very, very sure those risks will be mitigated. Thank you.
I think at this juncture, it may be necessary to say that we shouldn't look at cyber crime or the drop in standard when it comes to regulation from a bus-stop approach. First is that it's important to mention that the market will always be ahead of the regulators. But much more important is that the criminals in any environment will also be ahead of the people that are taking advantage of. So it's not a case of, oh, if you do this today, it's all over. But I also think that for all of this to work optimally, the level of cooperation between the regulators, the SROs, and the market player, including the investor, needs to be better. Because if we don't get all of this, we are not going to make any headway. Because I can confirm that currently, one of the big strengths of the investigative panel of NGX is the fact that very strong, what is the right word now? The panel is very strong as to zero level for fraud. And that's why every time you find a major decision being made there, they make sure that everything that you gain is taken out from you. And if you also look at the panel in terms of what we're looking at for big organization, you also find that the same thing is also happening. However, issues beyond those two panels gets to court, it takes forever. So if you don't have a situation where the courts itself, the processes in the courts are also faster, then that will not help the image. Because a man who gets burnt once, the chances that he will probably not get close to that market again. Quite a number of persons who lost money in 2020, 2008, and 2009 are just beginning to make effort to come back. So one thing that, again, the regulators in conjunction with government must do is to look at the possibility, can we fast forward the process when there are issues of infringement around investment in the capital market? That way, I think all of us will be better for it.
Yeah, very, very true. Because when I talk to some of my colleagues that were burnt, in that 2008 financial crisis, they don't want to come back. They keep telling me, no, we're not coming back, laddie. We know it's bullish now, but we're not coming back. They keep telling me that. I'm like, I don't know how to convince them. But definitely, we all have a role to play, and the regulators and the stakeholders. So I think right about now, because we looking at the Q&A box, I see it's buzzing with questions at this point, and we're seeing your questions definitely, and we're going to be taking some of those questions now. I think the first one I'll take here, I believe this one will be for Mr. Nadozie. It says from anonymous attendee at this one. It says, I have an account in operation with an investment trading company. Can I use Coronation side by side with the platform using the same CSCS? That's a question for, I think Mr. Nadozie can answer that.
I open up to anybody. Yes, from a CSS point of view, you can. So I just to ask Coronation, your platform, does it have barriers? Does someone have to be a member of Coronation Brokers to use your platform?
No, not at all.
Okay. So yes, the person can.
Okay, so I believe Anonymous, I believe your question has been answered there. So let's look at other. Okay. Okay, so we have one from Golaho Kolawole. He says, is there any way for external individuals to access data? Most data analysis boot camps practice data from US for the capital market and banks. Nigeria has no data. My broker takes 2 weeks to send me stock analysis. That's quite an interesting one. What do you think of that, Mr. Awo?
I don't agree that there are no data. What you don't look for, you don't find. All I've done all my adult life is the capital market, so I can confirm that there are quantums of data. However, you must also make a distinction between primary information and secondary information. And you must also make a decision between data that has to do that targeted at investment. What you'll find a number of Nigerians want, they want information that will help them make money, but they don't want to pay for information. So if you don't pay for information, you are not going to get the data that you're talking about. But certainly there are quite a number. On daily basis, the three markets are basically churning out information. At the end of trading in the next 1 hour, no, less than 1 hour, okay, almost 1 hour, by 2:30, you're going to find information from your brokers, you're going to find information from the NGX, you're going to find information from NASD. So it's not true that there are no data. What you need to define is that what information is it that you want? And if it's information that is beyond primary, then one of the things you must also be ready to do is to pay for those information. And when you want beyond that, then you also need to get analysts who then look at what segment of the market that you're looking at and what information do you want. Basically talking about tailor-made information for your own investment, but certainly tons and tons of information. Even the annual account of the companies themselves is huge information. But what you find with a number of us, apologies to on this, if you will be amazed that the woman who sells granules or bole, or even what's called akara, uses the annual account, and then you're wondering what is it that is happening? Okay, but that is not to say that everybody must source it from its own information in hard copy. You can also get information e-copies, but please be reassured that you must also define what quality of information you want, and because if it's secondary, then you must also be ready to pay for this information.
All right, does anybody else want to contribute to that?
Yeah, so I want to say that question, in as much as Mr. Awo has, excellently answered it, it does throw open the presence of a gap. Again, there has to be significant investment rather, in how data is mined, how data is shared, even to the very least. I mean, we're talking about retail penetration, deepening retail penetration, expanding the depth of the capital market. And this is a very valid question. That data does exist, but nobody, at least to that person who asked that question, nobody has made the investment to say, this is the data you need. You have 5K, you have 10K. Well, we've made this data available for you. We have taken time to analyze it. We have a very low cost model that makes it available and affordable to you. You can use it to make this. If you've made that decision, you can also use it to invest through our platform, through the tech that we've provided into the capital market. So yes, it is very sound response from Mr. Awo, but it also presents a gap that innovation can plug.
Sure.
All right, thanks for that, Mr. Wachuku. So we have another question here. This is from Sim Sakinu. It says, with the huge volumes of unclaimed dividends for the investing public, a lot of people are discouraged from putting their money since their returns get stuck and then they pass on. There are no clear and easy ways to transfer ownership to the next of kin. There's a wide gap in basic investment knowledge, so most people view such investments as pouring water into a basket and would prefer to consume the money in other beneficial ways. How do you want to mitigate these problems and build investor confidence and overcome the aforementioned issues? I'll throw this one to the floor now.
Okay, maybe I'll. Okay, Mr.
Okay.
Toby is most likely the best person to take a first stab at this.
Unclaimed dividend itself is a fallout of some of the things that government had done and hadn't done well. Unclaimed dividend became a major issue following the privatization by Bureau for Public Enterprise. And why? You are going to allocate 100 units to Edo State, and Edo State will then share it among 100 persons, and then you allocate the same 100 units, for instance, to Oyo State, which is bigger in terms of population, and they begin to get a quarter of a share for them to be a shareholder. So, and what the people then do is to use all sorts of names as a way of getting around it. However, the biggest challenge looking at the market in terms of unclaimed dividend is this level of non-disclosure, with due respect, between parents and their children. Because we've seen a number of times the man is late, the children, because they are not knowledgeable in the capital market, they just see certificate lying all over the place and they don't know what to do with it. And so the starting point may also be that for parents who have taken time to be in the market, they also need to begin to educate their children. And so by the time they've lived their time, those papers that are lying all over the place will make sense to the children as to this is money. But that itself is not the only thing, because one of the challenges that government regulation has also brought in now, once the account is over 20 months, it goes to SEC and it goes to a special account. That itself is causing a huge level of challenge. But whether we want it or not, what I tell people, and young people in particular, is if you think because there's been a problem of unclaimed dividend, which is huge in terms of sum, and you will not invest, what it then means that when the benefit of investing also comes, you will not get. By the way, because there are no jobs, you say you will not go to school. When the jobs comes, the people who want skilled manpower will not come and look for people who didn't go to school. So the same thing with investments. But the other leg of it, you can also have a situation where you have your account domiciled with a specialist who can also help you manage your portfolio. And that way, yes, you pay some money. Don't forget what I talked about data. But that person will also be in a better position to make sure that all your investments are also better managed. But above all, quite a number of investors, especially retail investors again, don't keep records. And when you don't keep records, the chances of you running into unclaimed dividends will be higher. Even if all you need to do is to buy an exercise book. Oh, I have shares in these companies. And when you sell, you also say, I've sold this out of the 50 units that I have, I've sold 10, so I have 40. So when there's a declaration of dividend or even bonus, you know what you'll be expecting. But all of it again has to do with the level of education, again, of the local retail shareholders.
All right, thanks for that, Mr. Awa. I think Mr. Nadozie wants to chip in there.
So, I mean, Mr. Awa has hit the nail about the reason why this happened in the past. But the beauty is, we working with SEC and other players in the market, we're trying to make this thing to be a thing of the past. See, we have a mandate, we have a goal which we have set, and it's to onboard the young people to our capital market. And the reason is pure. We go around and we see what is happening across the world. We see those who are not regulated coming to meet us to say, we know that CSCS, if we can do our settlement and our custody through you, These huge volumes we are doing today, we'll do in multiples. The reason we are having, this type of transaction, heavy transaction volume, we've spoken with various people. But they're even saying we need something that has integrity and license to back us up. They pay dividend because the onboarding process includes full KYC.
Yeah.
We're having challenges because people did not disclose full KYC when they onboarded themselves to the capital market earlier on. That's the biggest challenge. And the truth is, because we've done, full digitalization now, if you have a paper certificate, nobody will listen to you in this market. You have to go through that process of converting that paper certificate and make everything digital. Once you go through the full KYC process today, your dividend will be paid to you immediately. Dividends are being paid. You don't need to do anything again. You don't need to do anything. So I want to just plead with people. I'm looking at the figures on our Power BI here, and it's so alarming. Out of 15 million accounts which we have in the market, it is shocking that we have less than 1.5 million that has done KYC.
Yeah.
That 1.5 million is because we had to beg people to say, okay, brokers, can you call in people? So we have over close to 90% of the market. We don't have KYC. They can't trade today. In fact, we have what we call non-trading accounts. Non-trading accounts, they are more than 60% of the entire market. That's people who just bought shares with spurious names. People who just submitted anything to do shares, and the shares are lying there, doing nothing.
Wow.
60% of the market. So please, I want to plead with people. Yeah, so the truth is, nobody wants to keep your dividend. Today, I can tell you with full assurance, because we were involved, I was personally on the project, where FIRS is going personally to hit Registrar. And FIRS is throwing huge figures at Registrar to say, well, if you've kept these people's money for this long, you must do this, you must pay that. It's a burden on the entire capital market. Registrars are going with lawyers with lots of figures to try and prove to FIRS that don't come at us. And FIRS, when they come at you, the tax body, it's not a palatable experience, laddie.
Yeah, definitely.
Please, I want to plead with people, go and do your full KYC. If you do your full KYC, all dividend will be paid to you. If you have outstanding dividend, it's a separate process, however. The process is you go to your registrar or to your bank. Banks are everywhere. You fill in the form. SEC, they are working to make sure this is done. And all your past dividend that has been held will be paid to you. So people have money on the table. Please come and take your money. We are not enjoying the money. We can't use the money.
And definitely, we hope that the forms are not too cumbersome. If you have to.
They are easier now with the BVN.
I ever think that the SROs, including CSCS, need to begin to look at the possibility of setting a percentage of their CSR to educating Nigerians around unclaimed dividends. Because if you do, and when I say educating, it's not the one that we stay in Lagos, you stay in Abuja or Port Harcourt, and you think you've covered the country. No. It is something that I think that going forward, SEC, NGX, CSCS, and brokers, including registrars, because a number of registrars have also, whether we want it or not, they've also made money with the issue of unclaimed dividends. Let them put a percentage of their CSR and say, we need to educate Nigerian investors, because the foreign investors don't have any money lying around here, other than the one probably that are caught up in the FX challenges of the country now. So, because if we don't do it, and it's not what you are going to just put two newspaper advert, no, it is something that we need to use down to the grassroots mass communication, not TV, radio, jingles, radio.
And influencers, I'm sure. We have so many influencers.
Unfortunately, a number of influencers don't even know about the capital market. So they probably will complicate matters. So don't let us use Don't let us use untrained teachers to go and train children, because apologies to Fela, they may teach them nonsense.
They have to get education to the so-called influencers.
But I mean, that's the reason why a bit of the CSR, if we are setting aside the percentage of CSR, that even when we educate even the so-called influencer, it all comes down to education. There would be ripple effect. The people you are targeting listen to the influencers. That's the absolute truth. So invest in also educating them what the capital market is, what unclaimed dividends are, and then in turn, they will speak whatever you want them to say.
Okay.
Yeah, definitely. So as I said before, the Q&A box is buzzing at this number 46, where we're doing our best to take as many questions as possible. We have one from Okudili Obiagu. Says, I have an account with more than one stockbroker and I can't access all after registering with the CSCS.
So if you have an account with more than one stockbroker, all you need to do, you can do a global search. I mean, I think it's 1,000 naira the brokers collect for it. You can do a global search. The global search will give you your holding across, regardless of who the person is. My advice is, instead of leaving it spread across 5, 6 different brokers, pick a stable broker and move everything to that broker, consolidate it to that broker. Once you consolidate it with that broker, you have an advantage of viewing your entire portfolio through the broker's app. You can also use the CSCS app. And also, I didn't want to talk too much about it so that the registrars will not think I want to take their business. But you can also use the CSCS app. I mean, we are not retail, but what we have done is, because we found out that the market is lagging behind, we've had to do a couple of retail things just to hold state. But we have provided APIs that all brokers, all market players can have, so that investors can view the entire portfolio. So please, if the person can send the email, I'm sure Coronation has an app that can enable the person even view the solution. So Coronation can onboard them. I've marketed Coronation for that.
Thank you, Toby. That's what I want to say, that, of course, in a matter of time, of course, that will be things of the past. Thank you.
Yeah, thank you for that. Sure, we've answered that question. And definitely, we see some people here saying that they would like to have this video, sent to them. Most of them are dropping their emails. We're seeing your emails, and definitely you're going to be able to, the Coronation Registrar team will definitely do their best to get that across to you. So now, another one here, Anonymous, which says, why can't BVN be used for this KYC? Every information required is already available in the BVN, which is a unique identifier to each investor.
BVN is used. In fact, with MTN, all you just need to do is put in your BVN and so the only difference is you have to pick an account you want, because BVN is connected to all your accounts. Your dividend is to be paid to one account. And if you want to, by default, when you open an account in the capital markets today, you're enabled for direct cash settlement. So that means if you buy shares, we debit your account. If you sell shares, we credit your account directly. You can opt out to have your portfolio manager or your broker manage it. So that's why you have to put in an account. So your BVN, your account, and your phone number, because your BVN can also be tied to multiple phone numbers. With those 3 things, most apps who ride on our API, so they can put in all the information that you want. We even prefer it because it grids out those information. We know this is what you really have on your NIMSIA and your BVN. So with those 3 things, you can have an account open on the platforms of, brokers and other players who have automated. But the API does that today.
Fantastic. So we have another one from Richard Obiano. So many questions here. This is from Richard Obiano. He says, there is a discouraging factor in investing in the capital market, and that is when you invest in a particular stock, when the stock is on an upward movement, the brokers will tell you that your purchase request will be delayed because there's in-house purchase and cross purchases And by the time your request is treated, you're buying at a very high rate. And this is a great disincentive to investment. Please, can you shed more light on this strategy? This is from Mr. Richard.
I think Mr. Owo will take that, but please, any broker that does that, it's against the capital markets. It's against our tenets. It's against our ethics. And every brokerage house is meant to have a sponsored individual. As part of the training to become a sponsored individual, this is one of the things which you are not allowed to do. The SEC frowns at it. I mean, all of us players in the market, we frown at it. I'm sorry to say, if the individual who has said this can drop his email, it will be good for us to know who that broker is. I will personally take it up with the NGX. The NGX is an SRO. They'll punish that broker, and I'm sure Mr. O would be able to corroborate. They punish a number of people who have done that. It's unethical, completely unethical.
I agree that if you deliberately refuse to buy for a client who has given you an order, if the stock is available, that is unethical. But it's also important to say that sometimes you give an order, and your order, because of the size of the equity available, and I'll give you a small example with not minding my mentioning name. Mikio was listed by introduction. The first 1 week, it was because the demand for Mikio was higher than the supply. So there's no way your broker will have bought for you if there's no supply. So I think that needs to be understood. But however, to avoid a situation where they are buying for you far above the range that we are looking at, you can also say, look, beyond this price, don't buy. Okay? That is because if you fill the mandate form, that provision is also there. But much more important is the fact that you can also trade. There are quite a number of stockbroking firms now that have apps that you can trade on your own account. Okay, so those are the options that you also need to look at. But let me also say this, because one of the sentiments that one I've seen over the years is that, oh, I must buy XY company. I don't think the emphasis should be in buying a company. I think the emphasis should be buying first that your capital.
All right, Mr. Awo, seems that you're frozen there. If you can hear us.
Will be secured.
Okay.
That's the way I think it should also be addressed. Thank you.
Okay, fantastic. Yeah, we lost you for a bit there, but you came back.
Sorry.
Yes, yes, it's fine. It's fine.
I'm sure it's a
back
network.
with us now. Yeah, network. Yes, that's definitely the risk of being virtual. Definitely, but we've been able to go smoothly, and we're happy. You know, we've been able to at least attend to some of the questions. Yeah, there's still so many questions that we have to go by at this point, and definitely you all have done well to answer, you know, most of these questions. I was seeing one here. Let me get this out. Okay. So we have about 79 questions in here. Right, okay. this is from BSH. I wanted to change the account my dividends is being paid to at Africa Prudential. Registrars are demanding that I don't want to mention a brand there, I have to write a letter stating the reason why I want to change. Coronation simply asked me to fill eminent form. Is it a requirement to give, is this a requirement? And any reason why we have this change? I wonder who can take that.
Coronation, they can't take it because they've hyped their brand.
Okay. One of the things that you must also realize, every organization has its own structure. For me, it doesn't make it puts additional burden on the organization if you asking me to go and write a letter, okay? Because if you have a designed form, that's for me is even more universal so that anybody who comes in is speaking the same language. But you will not take away the culture of each organization as to how they want to address issues. However, if they ask you to write a letter and then you then come back, they say, come and fill a form, that's where I think there will be a challenge. But I would have preferred the situation where you have a standard approach to changing bank accounts. And I know that people change bank accounts for a number of reasons. I've seen instances where you're growing up in the business. Oh, I want to have a dedicated account for all my dividend. Fine. Okay. But whichever way it is, I don't think you have anything to lose. What is important is that the money that will come to you, whether you fill the form or you wrote a letter, as long as they are not asking for the best certificate of your great grandmother and you can provide all they have asked you to, I think you should just go ahead and fill or write the letter, because what is important for you is that the money should come to you.
Okay, may just I'll speak to the Chief Operating Officer of African Prudential. I know we all have a standard. I'm in that SEC committee for e-dividend, and we have a standard across board. The standard doesn't include that. So it may be a very old practice, which someone just asked the person. I'll speak to the CEO of African Prudential. Thank you.
Thank you for that. Thank you for that. So you want to say something, Mr. Doherty?
Yeah, Toby has mentioned that. Thank you.
Okay, fantastic. So another one here, can CSCS create a system where entities delisted from NGX are moved to the NASD and easily be dematerialized without going through hassle of doing so? Some companies got delisted from NGX, now on NASD. We need to dematerialize these entities in order to trade them. Can this process be made simpler for us?
It's noted. We'll try and make it simpler. There are complications sometimes that come up.
Right.
And NGX is an SRO. They have their rules completely different sometimes in certain things from the NASD. So, which is why I said I don't want to make a promise on what I can keep. Things I know I can get done or present to other ESCO members, I would say so. But this is not just stopping on the table of the CSCS. We have a couple of things which we're trying to streamline when this happens across trading floors. We just have similar rules. But I'll take that up. I would have a chat. Myself, Onome, and NASC.
Thank you. Thank you for that, Mr. Nodozi. So all our viewers would like you to know that the recording and the slides will be sent to your email addresses by contact team from Coronation. And also, if you have further questions, you can always, send your questions through, and your questions will definitely be answered. But before we round off this segment, just a quick one now. We know that right now, there have been conversations about, linking African markets. We have that African exchange, linkage project. So somebody in Ghana can buy a stock in Nigeria. Somebody in Nigeria can buy a stock in, take for instance, Ghana or other neighboring countries. How much of a burden is this going to bring to all of you on this platform? I'll start with yes.
Okay. So I think for us, we're excited. We're in that committee. I've also made a presentation on technology readiness at the last conference that brought all these stakeholders together. I think for us, it's just putting more liquidity on the floor and testing our entry into the global market. The truth is that within the West African region, Nigeria is, with all sense of humility, even though we may have other players in West Africa here, Nigeria is actually the ticking factor in West Africa. There is no West African country in terms of capital markets that would create any major change, even with what we're doing across West Africa. But I think what it does for us is it expands the retail bucket by onboarding other, nationalities within the West African bucket seamlessly and giving them the opportunity to trade in their country in their currency. So we have agreed on how the exchange rates would be done. Afrexim is also trying to work with us. They have a company now, which Mike Ogbalu leads, that piece that is trying to do all that. So I think for us, it's just setting the ground for Nigerian firms to be traded globally without necessarily needing to be on two different, trading floors. But technology-wise, we're ready. Operational-wise, we're ready, because it won't change us in any major way.
All right. Anybody want to contribute to that?
Yeah. From the investor's end, again, it also gives you opportunity to diversify your portfolio across country. Because if you had investment in a country whose economy is not in difficulty, it probably will help to make up or even out the challenge that you have in an economy that is also down. But much more important is the fact that the visibility they also bring to the country, given the size that we already talked about, is also a PR that the country cannot afford to pay for. So that, for me, is also the other end of the benefit that it brings to Nigeria.
Fantastic.
Yeah, so I just wanted to say that, I heard Mr. Nadozie speak, saying that technology-wise, you're ready. It would be great to know exactly what technological infrastructure is being readied, to welcome all of that that synergy that is coming on board. Because today, the average enlightened or technologically savvy Nigerian youth can sit in an app, right? And have FX denominated portfolios on LSC, on NYSC, right? It is because there is underlying infrastructure that has been readied that is able to provide that. It is not the kind of infrastructure that technological companies in Nigeria, these tech startups, were able to do. It has to come from the likes of the CSC, the likes of the SROs, of course, backed up by things such as the AFCFTA that we've seen, gaining traction across Africa. So it is a charge. There is this de facto consensus right now that CSC is probably the innovation hub, for the Nigerian capital market. So they need to rise up to that challenge as well.
Right. All right. Thank you so much, Judge. We're almost running out of time at this time, and definitely we've had a packed session, and we've learned so much. I'm sure our viewers have also gathered a lot of nuggets from this interaction here. But before we lose track at this time, I'd like to have Sophie Paul give us closing remarks and a vote of thanks.
Thank you very much, Ladi. On behalf of Coronation Registrars Limited, I want to thank you all for joining us today in this insightful webinar themed Leveraging Fintech to Accelerate Investment Opportunities in the Capital Markets. The opportunities in the capital market are vast, and the future, of course, favors those who are willing to adapt swiftly. So now that we have gained this valuable insights today, it's time for us to start implementing. And of course, I assure you that Coronation Registrars is big on technology, innovation, partnerships with fintechs and capital market operators to ensure that we provide investors best-in-class core applications for our data management operations to provide seamless access to your investments. A heartfelt thank you to our keynote speaker, Mr. Tobe Nadozie, our esteemed panelists in the persons of Mr. Olusheye Dohati, Mr. Nona Awo Phillips, Mr. Phillips Wanchuku, and our moderator, Mr. Ladi Williams. Thank you all for your active involvement in the success of this webinar. Most importantly, to our engaged audience, your questions, participation, and commitment drives us forward. To the team and everyone who has been part of this, well done, and we thank you. If you have inquiries on our Coronation products and services, kindly visit www.coronation.ng to know more about our offerings. In conclusion, fintech isn't slowing down. We have AI, machine learning, and quantum computing evolving, so our investment landscapes will definitely evolve. We encourage all investors to stay curious, stay informed, and stay connected. Remember, the journey doesn't end here, so let's leverage fintech to unlock new opportunities, create wealth, and build a resilient capital market. Until next time, keep investing wisely. Thank you very much.